first rates for the day, for the week are just going to filtering in on your screen now. And the first rates, right, just wait for it. HCL Tech is up by another 4%. 28 rupees higher for HCL Tech. That in a sense is going to be the big bulwark which would be at play. The small and the mid cap space, we'll talk about the index, but today the breadth is almost perfect. I mean 1:10 advances versus decline, which means for every one stock which is going down, 10 stocks are actually moving higher. But these are very early days. I don't want to jump into any kind of a conclusion. Like I said, sliver of the market, some stocks and big names will get re-rated. Which ones? We'll talk about it. IT is off to a good start. So IT in a sense is the plank on which markets are clearly resting and markets are clearly rallying. Reliance, another 0.75% or nearly 1% higher for Reliance. That makes it 2300 plus for Reliance Industries right now. So the top draw clearly, I think, is large cap IT. It is Reliance, the market breadth, and a whole host of mid and small cap stocks, which we'll just start talking about it as we go forward. But frankly, on the first trade, I think between last week and now, we are already up 2%.
Yeah, it's not a bad start at all. And I just want to quickly look at, what some of those multi-cap reclassification could actually do to some of the stocks and the kind of expected money flow purely on the basis of what brokerages are saying. So from mid-cap to large-cap category, the shift is bound to happen in a PI Industries, in a GSK Pharma, Hindustan Aeronautics, Honeywell Automation, as well as Jubilant FoodWorks. So I want to quickly revisit those names. Also from large cap to mid cap, a BOB, United Breweries, NMDC, MRF, as well as Concor as well. From small cap to mid cap, that's the cluster of names which are likely to see a big jump because of the SEBI reclassification of multi-cap funds, and AstraZeneca, Naveen Fluorine, as well as India Mart. So just look out for these names too. And a bit of a demotion here, mid cap to small cap, likely changes. Sundaram Fasteners, IFL Wealth, Indiabulls Housing Finance, CESC, as well as TTK Prestige. So these are likely to see some of the moves coming in. For the market, it's a comfortable start. It's not bad at all, you would have to say, this Monday morning. While it was pegged to be a bit of a quiet start, we made it all the way well above that 11,500 level. India Mart, yes, you're seeing a good move there. And yes, a knee-jerk reaction, be it or so it may be, but the breadth of the market, it has come off with flying colors. Voltas, Mindtree, PVR, Sun TV, all the small caps are the ones which are really lighting up the screen. CK, good start and sentimental move as it may be, but you are seeing the small and mid caps actually take center stage today.
Well, small and mid cap taking center stage is not too surprising because, Friday evening's circular caused quite a bit of furore, and Sunday's clarification may not really have been seen or understood very much because it didn't really say too much in explicit detail. So I think people might be still going with Friday's circular of SEBI, and that could explain possibly the heightened interest in this. But if you look at the large cap space in the futures area, you will find that the breadth is extremely positive, and that is certainly heartening because it indicates that A, there is no selling, B, there is probably some amount of buying, and C, it seems to be a little bit spread out across most of the sectors. What I'm finding as a change is the buying which is coming to metal stocks and a few FMCG stocks. HCL Tech, IT still leads the way because HCL Tech, Mindtree, all of these stocks are up and about. So I think it's a very good start, and I would remain a buyer on intraday dips during the day, and I would definitely, like Nikun just said, concentrate on the IT pack for good gains and good tradable opportunities.
All right, thanks, CK. Sandeep Bhatia joining us this morning. He's the MD, Head of Equity India, Macquarie Capital. Thanks so much for joining us, Sandeep. given by really how we are seeing the markets performing, it looks like there is anticipation of a further recovery and that the gloom and doom is fading away. Would you be on track with that opinion as well?
Well, I think there has to be a recovery after what we saw in April, May, June. Whether that means that's a sustained recovery and we see strong earnings growth come through, I'm not in the camp, at least for this year. I think the real challenges for the economy are still to be seen. We will have to see the strength of the festival season. Of course, the moratoriums are going to end, and we'll probably know only in the first quarter of next calendar year, Jan-March, where we are in terms of the wider impact on the businesses. Clearly, the winners are going to be large businesses and large caps in this environment. Small traders and MSMEs will continue to face pressures. And that is not going to go away until we see a real vaccine and a real stable medical solution to this crisis come through. There would be rallies in this market as we are seeing today, partly driven by some news flow which may not be totally fully understood. But that's what it is. To say that we are not, we have seen the end of all kind of challenges to earnings, I would not be in that camp.
I haven't heard